Hi everyone. Hopefully you can all hear me okay, and hopefully I've managed to mute the music correctly this time, and hopefully the camera works this time as well. For those of you who were here last time, I was just kind of waiting a little bit because I was a bit late on posting the update to eToro, and the previous post I made earlier in the week didn't go through, so I wanted to give a little bit of time for people to get in here before I started. So this isn't really like a Q&A stream this time. So, there will be a short question and answer period at the end, but I try and keep it on topic if you can and related to either Q3 or Q4 and to things that I'm actively invested in at the moment or have recently closed rather than anything else. So, let's start. He says, entirely unprepared. There we go. Yeah, so I'll give a brief intro for those of you who don't know that much about me. I'll also talk about benchmarks and go through how I've performed in Q3. Then we'll talk about Q4 and things like the elections and everything related to that, and plans for Q4. And then at the end we'll do a short Q&A. Yeah, obviously none of this is investment advice. There's a little disclaimer at the bottom. You know the drill by now, hopefully. So a bit about me. I put a picture of my trading setup because people always ask where I trade. That's my trading setup. That's where I sit all day, replying to all of you guys. That's where I am right now. I've been trading for over 10 years now. Most of that has been on eToro. I've been on eToro for 7 years. My background is in esports and gaming. I used to be a professional gamer. I've also worked for multiple esports companies and gone to events all around the world, working in logistics, working as an esports manager, and a bunch of other roles in between as well. I'm a self-taught investor. I started trading with no real knowledge. I taught myself through websites like Investopedia and things like that. So read into that what you will. I guess somewhat evidence that it's more about perseverance and having the right mindset than anything else. I'm fundamentals focused, so I don't use technical analysis too much. I prefer generally to position myself for the long term. I only invest in things that I like for the long term, even if it's something like a day trade or a short term swing trade. But for the most part, my portfolio is all about positioning for long term sustainable profits. I've been full time on eToro since 2017. I quit my job, as I said, in esports, and the rest is history. I'm still full time, and I'm actually going to be hiring someone very soon to help me as well, since things have grown so much. My compound annual growth rate is currently over 40% since joining eToro. It's actually closer to 45%, but I'm expecting it to fall a little bit more than that because there were some pretty wild years out there. So the target for each year is closer to 50 or 60% profit rather than higher than that. But obviously, market conditions vary quite a bit. So I try not to make any promises that are too bold. So we'll go straight into benchmarks. So I've got 2 pages of benchmarks. The first page is benchmarks for year to date. So this is obviously ending at the end of Q3. So this doesn't include October. But as you can see, I've outperformed essentially everything except for the two of the cryptocurrency indices, Ethereum and the Crypto 20 index, which is a collection of 20 top cryptocurrencies. I think realistically, although I have Ethereum and things like that on here, they're not really fair comparisons. I trade those assets, so I feel like it's, and I do trade crypto, so I feel like it's fair to put some in there to compare me to. But realistically, I don't think you should be expecting me to outperform things like Ethereum or the Crypto 20 or even Bitcoin when they're in a bullish year, because I'm not trading that with 100% of the portfolio. I'm trading that with maybe 10 to 20%, or as was the case this year. Most of that time was less than 10%. Obviously, Europe has done really, really poorly this year. You can see the UK as performing worst of everything. Part of that could be due to Brexit, which obviously is just on the horizon. But the US and the Nasdaq specifically has actually performed surprisingly well this year, given what's been going on. So here's how all of those same indices performed in Q3. So as you can see, again, I outperformed all of them. I even outperformed Bitcoin as well, which had a pretty reasonable quarter. Ethereum and the Crypto 20 index did beat me again, but not by such a huge margin this time. 21.18% for the quarter. Pretty happy with that. Hopefully you guys are as well, because that's a pretty good quarter. If I had that every quarter, I'd be pretty happy. And I think realistically you guys should be as well. As mentioned, I think the Nasdaq is probably the closest thing that you should be comparing me to. And the Nasdaq did have a reasonable quarter. Obviously, September was really bumpy. We saw that at the end of the quarter, so we lost a little bit there. That was my first red month, but still looking pretty good overall. And even October, although it's been bumpy over the past couple of weeks, is still actually green for us so far. We're currently at around 5% profit, so I'm pretty happy with how Q4 is going so far as well. So what happened in Q3? Well, as I just mentioned, we beat all of the major indices that I like to compare to and kind of show off. Hedging was a major part of my strategy in September to try and cut down losses. I didn't execute it perfectly. I really lost out a bit in the first week or so. I actually had a lot of short positions open at the start of September, and I closed them about a week in. So That was obviously when everything started declining. So I kind of got quite out in a bad position there. But overall, we did manage to control the loss reasonably well. And if you actually look at my performance through September compared to the Nasdaq or to even other popular investors who trade the Nasdaq heavily, I outperformed most of them. Including the Nasdaq in terms of drawdown. So we did manage to make it a slightly less bumpy ride, but obviously it was still pretty bad. Building positions in renewables. So this was a core part of the strategy for Q3. I did actually mention this in my Q2 call, but I never actually showed that on Twitch or put it on YouTube. That was only for eToro. But I will be doing these calls from now on. So yeah, I built a lot of positions in renewables ahead of the elections, expecting Biden to do well. And that's pretty much what we saw through the first debate and the second debate. Biden came out on top. The third debate was a bit more even. But generally speaking, with voter turnout looking like it's going to be really high, this actually paid off incredibly well. Renewables had an absolute killer quarter, and I think they were largely responsible for a lot of those gains. We've seen them cool off quite a lot actually in the past month. In October, they've actually come down a bit from those highs. But I'm still pretty bullish on them for the long term. I'm still expecting a Biden victory, so that's still the way that my portfolio is positioned towards. Although I do have plenty of other things that would benefit if Trump were to win as well. Overall, the earnings season was one of the best earnings seasons I've had for Q3. I had something like a 95% hit rate. So 95% of the companies that I invest in actually beat their earnings estimates. Some of the bigger ones from there were things like AMD and Beyond Meat that were really quite notable in their performance. And obviously, coronavirus and the political situation in the US and in Europe with Brexit as well, and actually even in China somewhat, drove the markets through the quarter. Obviously, Q3 earnings was the first time that we really got to see how companies were affected by what's been going on with coronavirus. So to pick out a few highlights from Q3, first of all, Apple competing with Peloton. So this actually happened towards the end of the quarter. Apple made a big announcement for Apple Fitness and products that were essentially competing directly with Peloton. And obviously, Apple is a premium brand, Peloton is a premium brand. So that was a pretty scary announcement. I was watching it live, and Peloton shares actually tumbled heavily. I increased my position in Peloton. Peloton was one of the largest positions in my portfolio at the time, and since then, Peloton has increased by around 20%. So that was a real big win. And I think actually we're likely to see Peloton continue to do well despite Apple competing with them. The wildfires and the Biden campaign obviously added to the renewable sentiment. Wildfires in California, Oregon, like all the way up the west coast of America were really kind of pretty bad, to be honest. And I suspect that we're going to continue to see more and more residential solar being installed in the US, especially since COVID restrictions on that coast specifically are actually not quite so bad in terms of like case numbers and things like that. It's not looking too bad there. So yeah, that's a good thing. Although I should probably clarify that the companies I invest in solar specifically, as opposed to just wind as well, and other renewable related things, they are very diverse geographically. So even if Trump were to win the election, SolarEdge, for example, sells 33% of their products to Europe. So it's not going to be the end of the world, even if things do go against us in the US. Beyond Meat was an earnings call that really stood out to me as well. Beyond Meat essentially had to switch up their strategy entirely because of COVID, since restaurants were closing and people weren't going to them as much. Initially, they essentially had a 50-50 split of their attention, where they were focusing 50% on retail products for supermarkets and 50% on B2B sales for restaurants and things like that. So they had to switch things up quite dramatically, and they actually beat their estimates despite having to switch basically 100% of their efforts and repurpose products even towards retail rather than retail consumers rather than businesses. So that was actually really, really impressive for me, and obviously bodes extremely well that they managed to beat their estimates despite totally changing strategy. Obviously, I do think that restaurants will rebound eventually. And so that market is still there for Beyond Meat, and if anything, they're still building more consumer awareness of their products, which hopefully will help them win over more restaurants as well. Ford. So Ford is one that I still got around 2% of my portfolio in Ford at the moment. Ford was trading at around $5 at the start of the quarter, and if you go and check the price now, you'll see that it's roughly at $8. So we've benefited a lot from Ford. Probably one of the bigger catalysts that happened through the quarter was the Ford Bronco announcement. Ford Bronco sold out basically immediately on pre-orders, went through the roof, had a really, really good reception. Ford obviously have spent a lot of money and a lot of time kind of redesigning their product portfolio. They've also had a lot of changes in leadership recently. So quite a lot going on there. The Mustang Mach-E is coming out soon as well. I think Ford are actually in a really strong position regarding EVs. They're one of my favorite companies for EVs at the moment, and maybe some of you will know that I've actually pre-ordered a Mustang Mach-E. So some people might think that makes me biased, and I'm biased because of me pre-ordering one. But in reality, I've pre-ordered one because of the research that I've done into what Ford is doing, and I just believe that fundamentally this is probably the best premium electric vehicle out there now, competing directly with Xpeng, Neo, and the Model X and Model S, for example, and Model Y as well, I should add. Finally, two other companies I wanted to highlight was FedEx and UPS. Both of them also had really, really strong earnings. Basically record-breaking earnings for both companies. I expect that trend to continue because increasingly we're not going out to shops to buy things; we're just ordering online, and these two companies are destined to benefit from that. They've also two companies that are investing heavily in sustainability as well. So UPS has a contract for I can't remember how many vehicles it is now, but it's a sizable fleet of electric delivery vehicles that I believe are due to be coming their way late 2021. So it's even with these positions, I'm still keeping in mind the ethics and sustainability of it as well. There's actually two others that aren't on this list that I just want to mention very, very quickly as well, which is Home Depot and Lowe's. Both of them had their best earnings reports in the company's history for both of them. So those were also really, really good wins. We still have sizable positions in both of them as well. All four of those positions that I've just mentioned, FedEx, UPS, Lowe's, and Home Depot, are paying out dividends as well. So that's part of the safer part of the portfolio. Moving on to Q4. So Christmas period, I think, is going to be led by e-tailers, and obviously this is because of COVID. So you will have seen over the past few weeks and months, I've been building larger positions in Shopify, in Etsy, and companies like that. We don't have any Amazon at the moment. That's more for ethical concerns, and their ESG is questionable at best. But we have a very sizable position in Etsy, which I think will benefit very, very well from this period. I still believe actually in the general trend away from companies like Amazon and Best Buy and Walmart, and towards more bespoke handmade stuff. Although the kind of crunch economically could impact that a bit, since obviously those are slightly more premium kind of brands that you would go for, comparing Etsy with Amazon or something like that. So that's something to keep in mind. But as I said, I've been increasing exposure there. We're already looking pretty good on those positions. They're all green at the moment. pending the market dumping while I'm on this call. I am watching it. You saw my setup earlier, so I've got screens above, and it has dropped a little bit, but that's besides the point. I'm getting distracted. The other, of course, thing that's likely to occur in Q4 is Brexit disruption. We've seen the kind of games going on between the EU and the UK. There was a recent quote that came out from the EU that it was part of their strategy to kind of make it look like Boris has won in order to get some sort of a deal across the line. It's really hard to tell what's going to happen there, but it's more something that we need to be kind of keeping an eye on and trying to mitigate risk. Delivery companies, I mentioned earlier, UPS and FedEx. I think they're going to have record-breaking earnings again this quarter. We're obviously in the midst of earnings season now. Still waiting on those two to report. Actually, still waiting on most companies. Yeah, that's that, I guess. I mean, it kind of ties into the e-tailers situation as well. Expecting them to do a lot of volume in terms of deliveries. The US elections is obviously still going on. There's a lot of different risks that we could talk about here in terms of trying to mitigate the risks from either candidate winning and what's likely to happen, and obviously the Senate situation. There's a lot of things to unpack. But to kind of make it simple, I would say that the big concerns of a Biden win would be in mega cap tech companies potentially taking a substantial hit, since there's been a lot of discussion about trying to break up monopolies, break up some of those larger companies. And obviously, we would expect to see oil companies go down. The flip side is that renewables should do well, and probably Chinese and even European stocks should do better as well. Simply because the Biden administration is likely to be more open towards trade deals than Trump was, less strict at the very least. That also affects chip makers and things like that as well. In terms of other trends I'm looking at, I think transportation is still a really big thing that I'm looking at. You will see that I added ABB to the portfolio not too long ago as well. I'm pretty bullish on them, not only for their transport stuff. They do a lot in robotics, but their transport stuff is certainly a big part of it in terms of like EV infrastructure. And by EV, I don't just mean cars. They provide a lot of infrastructure for buses, for tram lines, for all sorts of stuff, boats even, and ferries and stuff. So that's obviously a very small part of it, but I am looking more and more at things like hydrogen based companies as well, and looking for other investments in that sector. One final thing that's not on here that I haven't mentioned as well is gaming companies. Generally, the Christmas period, the holiday period, is a pretty good time for gaming companies. We have the console releases coming up, so that's another area that I'm looking at. But I didn't write it on here. I was running out of space, guys. I can't put everything on here. So that's it for this little update. I'm now happy to try and answer questions. Please try to keep them somewhat relevant to either Q3 or Q4 related stuff. We can talk, earnings season is obviously underway at the moment, so there's a lot of you that all want to ask questions about earnings that are coming up and what I'm expecting. And obviously we had AMD already today. We've got a Microsoft this evening. I would prefer not to answer those questions if there's other questions about Q3. But yeah, feel free to start firing questions in, and I'll try and answer them. Oh no! Oh, I've opened myself up to the hordes now. Let's see. Trying to pick out some good questions. Added Ethereum into your portfolio. Why is that? Do you expect a boom? Yeah, crypto is something that I didn't actually talk about much in this update, but crypto is a good part of the hedging strategy against a Biden win as well, to some extent, and also just against the markets kind of struggling from COVID. So we've seen Bitcoin break through 13K. Ethereum is up over over 400 now as well. It's kind of just battling at a resistance level there at the moment. I've increased exposure to both. I now have almost 10% exposure to cryptocurrencies. Most of that is already in profit. I think when we look at Bitcoin, especially right now, I think that there is a real chance that it could break out to new highs that we haven't seen since 2017. So up towards 16K or so is kind of where I'm looking at. We've benefited a bit already, but don't expect me to be putting like 50% of the portfolio in. I learned a lot of lessons from 2018 in terms of what is a reasonable amount of exposure, because they are very volatile. In terms of Ethereum, I think that's obviously the next obvious one to follow. It's still extremely popular, and looking at how it's moved compared to Bitcoin over the past week, especially, it hasn't really made its big breakout move yet. So that's why I've been buying more Ethereum recently, even today, actually adding a bit more. Loads of questions about AMD, so I'll try and touch on it quickly. I caught the end of their earnings call. I actually missed the start of it. But obviously, a lot of big news with them acquiring Zillanix. That actually, by the way, increases their profits by double. There was 600 million in profit from Zillanix last year. So, I think it's a really important purchase. Obviously, it's part of a response to what Intel and what Nvidia have been doing and trying to diversify their product range a little bit more and, future-proof the company a bit. I think Lisa Su has been a really, really phenomenal CEO. I didn't think that I would ever be excited about another graphics product from AMD again, but we do have Big Navi tomorrow, and their leaks look pretty promising that they might actually finally have something competitive. If you tuned into my last call, you'll remember actually that I said that this has been my theory for a while, is that if ever they were going to try and make a play to catch up in graphics, it would be the year that they're releasing consoles, because obviously they have a deal with both Microsoft and Sony. So yeah, there's a lot to think about with AMD. I'm still really bullish on it. That's why I added more positions today. At the end of the day, they beat their earnings estimates. The deal for Zillanix isn't quite as cheap as I hoped it would be. I was hoping for something closer to 30 billion, which is actually roughly where the rumors were. But it was 35 billion. So I think that's part of why there's a little bit of disappointment, and obviously that's why if you go and look at their share ticker, the price for that has increased by like 11 or 12% today. Because obviously, they're having all their shares bought off them, a hefty profit. So generally speaking, still really bullish on AMD. It's now my biggest position in the portfolio again, ahead of Microsoft. It is sitting in red at the moment by about 4 or 5%, but I'm still really, really confident in the prospect for AMD. So. Today you closed some short positions in QQQ Do you see an uptrend coming this week? Yeah, I mean, generally for Q4, it's not so much that I see an uptrend necessarily, but I do think that most of the companies in our portfolio, at the very least, are going to beat their earnings. We have Microsoft reporting tonight, and Microsoft accounts for a substantial part of the S&P 500 and Nasdaq. So that if they have a good earnings, then that bodes well for Amazon and Google and all of the other kind of really big tech companies. Also having a good quarter for the most part. Obviously, some of them are a bit more diversified in what they offer to Microsoft, but generally it's a pretty good sign if Microsoft beats their earnings, and I expect that they will. They've got a really compelling product lineup across the board. I think the demand for things like Azure and various web services has increased due to COVID. People upgrading their web infrastructure. So generally speaking, I think there's pretty good reasons to be bullish at the moment. I think this sell-off that we've seen in the Nasdaq has more or less kind of run its course. At the very least, we'll get a bounce. But really, I think earnings is the thing that's likely to move it. So that's why I'm pretty low on the hedging at the moment. What do you think about Ocado and your reason for closing it today? So I'm still bullish on Ocado. I actually am still bullish, and I consider keeping it open. But realistically, I just think that there's better opportunities. Buying AMD at sub $80 is too much for me to pass up. Yeah, it's not so much that I'm bearish on Ocado, but it is worth considering that Ocado I think has actually been pushed down quite a lot just from the struggling UK economy. Um, COVID in the UK is getting bad again at the moment, so Ocado are probably going to have more demand as well. So there's a lot of reasons to be bullish on them, but I think there's just better opportunities elsewhere, especially when looking for some more stability in the portfolio. Can you touch a bit more on your new strategy going into November, if you post about on eToro and the effect it has on people with lower investments who are following you? Yeah, that's a pretty good question actually. Uh, I said previously that I'm planning. I actually posted about this over a month ago now, I think. That I'm planning on reducing my average trade size from 1% down to 0.5%. And it's a move that I've been thinking about for a while for a few reasons, but really there's been another event that's kind of pushed it up the agenda a bit. So originally, a lot of the reasoning behind me doing that was that it allows for um, easier kind of easing into and out of positions, right? If I have 200 positions in the portfolio instead of 100 positions, then that makes things easier. Personally, I really like having all positions at roughly the same size. I think it makes the portfolio much easier to manage and kind of track rather than having totally different size positions here, there, and everywhere. So that's the way that I prefer to trade, and reducing it to 0.5% does have some negative effects on people copying with lower amounts. So essentially, the real risk is the minimum trade size on eToro. The minimum trade size on eToro is $1. So at 0.5%, that would mean you have to copy with $200 to copy everything. That doesn't account for any spread fees, and that doesn't account for any sort of drawdown at all. So if you copy me with exactly $200, thinking you're going to get every position because they're all going to be exactly $1, you're wrong, because to start off with, you'll have a spread fee of maybe 0.2% or something for each position. That alone will then put you below that number. And obviously, if I have any losing trades and things go down a bit, then you'll be in a bad position there as well. So that's the downside to it. That's why I've kind of increased the minimum, the absolute minimum people should copy with. I think is $300. That allows for a 50% drawdown, which is pretty big. And hopefully that won't happen. But also spread fees and things like that. Realistically, I still think that $500 is better. I'm not too sure on how eToro calculates things like dividends and also in terms of rounding decimal places as well. So if I have a position that's, let's say, $2, and I make a trade with that position and earn 0.5% profit, that's less than that's only 1 cent, right? So anything less than 0.5% profit or more than it would involve eToro doing a lot of rounding on behalf of the person copying. So it can lead to slightly different results, and that's generally why I have a recommendation of $2,000 plus. Not to mention like the psychological effects of $2,000 being much more money, and people kind of think of that more long term than they do maybe $100 or $200, where they're more likely to potentially withdraw it after only copying for a few weeks. So yeah, there's quite a lot to it. But the thing that pushed me to do it sooner is that I've been struggling to open a few and close actually a few positions in the portfolio over the past few months, and there have been some desynchronizations of people not getting those things. eToro actually fixed basically all of that for the most part yesterday, so I shouldn't really be facing those issues anymore. But part of this is also about scaling. As my AUM grows, then we do run into problems again with liquidity on some assets. So that's also part of the reasoning. When adding funds, basically, it's the minimum for copying is what you should be looking at if you're adding using copy open trades. So again, $300 really is the absolute minimum. $500 would be better if you can, but 300 is the absolute minimum. I put 500 in my bio just because I think it's I think people are likely to take whatever number I give and subtract 20% and then put that much in. So that's why I put 500 rather than 300. If I put 300, then I'm sure that people will think that 200 is acceptable, and it's not. So that's the reasoning. um, what do you think for Q4 for remote working software companies, Salesforce, Splunk? Yeah, so we have a little bit of Salesforce in the portfolio at the moment. Obviously, you can argue that Microsoft does quite a few of those products as well. I think Zoom is very overvalued in terms of the communication tools, and I'm really not actually that bullish on Zoom. I think Microsoft is really the major play that we have in that space. I haven't really looked actually too much at things like Splunk and Twilio. I know that Twilio just did really well, and Splunk has done well as well this year. So, you know, it may be something that I look at again in the future, but I think at the moment I'm pretty happy with the exposure we have with Microsoft, with Office 365 and Microsoft Azure and Teams, and there's a lot that we kind of get bundled in with Microsoft. And I do think that their products are competitive and compelling there. We also do have Dropbox as well. That's another one to mention. Dropbox valuation wise is incredibly attractive. I've been holding on to Dropbox for several months now, and honestly, I'm still surprised that it's as cheap as it is. So I think I think we've got reasonable exposure to that kind of segment. Maybe I will have a look at those companies again at some point, but for the moment, I don't think it's my biggest priority. Although I do think the work from home trend is likely to continue for at least the next 6 months in a big way. Palantir is not something I'm interested in trading too much. Well, I mean, it's essentially part of the weapons industry. So, um, what do I think about Netflix for November, December? That's a pretty good shout. So I have 2% exposure off the top of my head to Netflix at the moment. Um, I think the storm that happened with the QT's TV show has kind of blown over. Looking at the content they've been coming out with, it's really good. They've obviously released their earnings already. They're always one of the early ones, and it wasn't quite as exciting as a lot of people were hoping for. I don't think it was bad though by any stretch of the imagination. And having tried out Disney's offering, I was really very unimpressed by how they kind of there's no real attempt at filtering content and guiding users towards content. So I think Disney will struggle. Actually, they'll do well over Christmas, of course, and they'll continue to grow. But I think comparing them with Netflix, I just don't see it as a good deal, especially considering what's going on with their theme parks and things like that at the moment as well. So yeah, I think Netflix is still really compelling, and that's why it's still in the portfolio. And yes, The Queen's Gambit is really good. I watched the first episode of that last night. Um, Orsted, yeah, I think I saw you mention Orsted earlier, actually. Yeah, Orsted and VWS are both companies that I really wish I had more of. I've been bullish on both for the past 12 months, really, and I closed some towards the start of the year, and since then I've struggled with liquidity with eToro to actually buy any more. So I've actually, if it was up to me, I would probably have about 4 or 5% exposure to those two companies, VWS Systems and Orsted, at the moment. Especially with what's the kind of Green New Deal theme that's coming out of green recoveries and things like that for the US and for Europe especially. So I think it's really compelling. Both of those companies, they have great fundamentals. They have great returns. I actually think that they're pretty likely to become giants in the industry. Both of them, but unfortunately, I can't. I can't get any more of them at the moment. eToro is working on a solution, so hopefully I can add some more to the portfolio. In terms of what I'm expecting from earnings, probably it's hard to say. I think that it's not going to be an easy quarter for them. Um, but really, I'm thinking more long term with my view on wind companies, and I think 2021 especially is going to be a really good year for them. Um, as countries continue to try and hit those target emission goals and uh, yeah, CO2 emissions. Sorry, I was just checking the markets. Amazon ethical reasons. Yeah, where do I start with Amazon and ethical reasons? The way they treat their staff has been. I mean, you've had. I think it was. I'm trying to remember who it was. I think it was the CTO or someone that came out against them about 3 or 4 months ago. There's a lot going on there. There's a lot to unpack, but they're just nowhere near ethical enough. They're not doing enough in terms of kind of offsetting carbon emissions. They're not doing enough in terms of staff welfare. They're not doing enough in terms of equality and governance. Um, Generally speaking, I mean, genuinely, I think actually Walmart is doing a better job than Amazon. And actually, if I were to go into a company like that, probably Walmart would be where I'd go instead. I think they're actually a better valuation right now. The other thing to consider with Amazon is that I think AWS is really starting to struggle to even maintain market share compared with Google, Alibaba, Microsoft, etc., who are coming out with more competitive offerings. So yeah, EA is a questionable one as well. EA is a questionable one. Like it's really difficult in terms of the ESG situation in investing, right? That there's everything is kind of pros and cons. I mean, Tesla is a good example as well. I've changed my mind on if I think Tesla is net positive or net negative to the world quite a few times, certainly to begin with, and it's undeniable the impact they've had with electric vehicles and even battery storage as well. The impact they've had, and obviously they're a good investment. Maybe not right now necessarily, but over in hindsight, they've been a fantastic investment. But looking at how they handled COVID, looking at what they're doing in Bolivia regarding lithium mining and things like that, it's hard to judge. All of these things are really kind of grey zones, and so if you're expecting 100% consistency in terms of my position on companies like EA or Activision, who I'm still actively trying to boycott because of how they've handled things, it's it's always going to be a grey area because things change and at the end of the day, to some extent, risk mitigation and diversification can be more important in some instances as well. So it's a bit of a the goalposts are always moving in regards to ESG stuff. So I try my very best to make it as to do as well as I can with it, but it's a difficult thing to try and manage. yeah, it is hard to justify the AAA game companies, but I mean, you know, the whole kind of the whole burn cycles where they just have their staff pushed to working through weekends and all sorts of overtime unpaid to get games out on time and stuff. There's a lot of questionable stuff there. Um, yeah, I don't think there are really that many other questions that are that relevant. Someone asked about REITs. It's just not my area of expertise. I wouldn't feel comfortable investing in that market, especially at the moment. Even though it is potentially good for diversification, I'm not sure that I really have the expertise to invest in that. I prefer to hedge the portfolio in different ways. Ant Financial, yeah, Ant Group. It's big. I was very bullish on Alipay and things like that a long time ago. I haven't really looked into it too much at the moment because it's a bit outside the scope of what I like to invest in. So there's probably better people to ask than me. I think, unless I can spot any other good questions, I think that's going to be it for today. I will do another normal question and answer session in a month's time or so. I'll try and do them every month. Finally, thoughts on Anton Creel. I think that he is borderline a scam artist. I've seen his YouTube channel, and I think it's complete garbage. So that's my thoughts on Anton Creel. Also, he called out copy trading as being bad, and he's wrong. I think I'm evidence of that. So that's my thoughts on Anton Creel. I probably shouldn't have included that in this video. Very off topic, but you triggered me a bit by saying his name. Okay, thanks for watching, guys. I will do another Q&A next month, and I will be uploading this to YouTube for anyone who missed it. If you're tuning in late and you missed it, then you'll be able to see it on YouTube probably tomorrow. Obviously, follow me on Twitter, on eToro and stuff, all that good stuff. There is a link to the Discord in the bio below. If you want to come and chat with me more regularly, feel free to do that. And thanks to whoever it was that just subscribed as well. You don't need to subscribe. I earn enough money as it is. If you choose to use your subscription on me, that's fine. But I don't ask for it. Thanks for watching, everyone, and I'll see you all next time.